Yeah. How is your farm preparation going? Yeah. So what we will do is we will try to look at as much as possible various scenarios to the mocks and see how we can do it. When are you sitting for the paper, Marian?
23rd.
23rd. So we are just on the 12th today. So that's about another 10 days more. So we will see what we can do on that one. I think the best thing is now somehow to find time to write the answer. Because you start writing, only you develop your skills of answering this paper very well.
Yes.
So I want to look at you remember we were looking at a particular mark because you remember all the time we were talking about this particular company. I think I made a mistake. I realized because actually this is good always to read this thing. What you see is thing given here. I want to look at the piece in with you. Yeah. ADF, pre-C, what I was actually, I can't find it. But what I was trying to tell you was as far as the ADF company is concerned, if you look at the financials, what they are given, it is given as a 30th November 2016. So, probably because they are taking the exam at the end of November, so almost they have gone right up to that point. So the pre-scene what is there is as at 30th November 2016. So it's not 1 year early. 1 year. I told you earlier it is. It's 1 year in arrears. It is not so. The latest financials are given. So according to the latest financials, because what we see is to 2015 and 2016. So once you look at what we see is we are making, surely we are not doing well, but profits have come down very badly. And also what we can see is cash balance is very little what we have. So we can see surely we are not doing that well in this particular scenario at this moment of time. So I think this is the time they have to think of some new drastic strategic changes. If we don't do something quickly, we are going to have a lot.
You're breaking up. Hello?
Hello.
You're breaking up.
Yeah, just a minute because I'm on the screen. It is breaking. Just give me a minute. I will be all right. Yeah, hold on. So this is what I want you to look at. The statement what is given is 30th November 2016. That's even, maybe they have prepared draft accounts. So surely these are not audited accounts, right? Surely these are not audited accounts. So because we are in November 23rd, but they have probably estimated and prepared the figures as at 30th of November 2016. So the very latest shows that we are really down in our profit. Our revenues are down. And because earlier I thought it's 1 year earlier and by the time this it will be a loss, but it may not be so. It's a real profit, but a reduced profit as at now.
Yes.
And you can see a little bit of accounting deficiencies I want you to note down. You remember Max Anderson, maybe the son, he is the finance director. They are not telling about his qualifications or anything like that. And the internal audit is also a part-time person. So it's a family concern. I don't think they are really looking at international accounting standards and all that.
Mm-hmm.
I want to look at very particularly one little presentation. Look at the non-current liabilities and current liabilities. Loans last year. It is 4,200,000 plus 300, 4,500,000 last year. Last year closing,
Yes.
the current component is 300,000, non-current component is 4,200,000, 4,500,000. But you can see this year it is 3,266 plus 233, 3,500,000. So we have paid 1 million loan installment. So there is something wrong in the financial statement. Normally, the next year's installment should be shown as a current liability. Understand? So they are only showing 300,000, but they have paid 1 million.
Right. Okay, yes, yes.
Okay, normally the next year's capital part of the installment is shown as a current liability. So either the presentation is wrong, right? Or maybe that some bank has demanded the payment and they had to make an advance payment or an early payment. That could be one reason. So I want you to note down because there can be probably a question in this area, about the presentation of financial statement. If they are shown 300,000, the loan, the total outstanding should have been 3,900,000 at the end of this year.
Yes.
So there is something. So you can see to a great extent what we can say is the accounts are not so reliable because probably they are not audited yet because they are still not even 30th of November. So they are draft estimated accounts most likely on the 23rd of November. When you sit for the paper, you can see the trend is not very good. So, looking probably at this time, only you remember that they were talking about acquiring a company called Milco.
Yes.
That is what we were discussing. It was a cheese manufacturing company, and basically they were also a family company. And what they said was that the founder has retired due to health reasons or whatever it may be. And that company also, what you can see is the profits are declining very, very heavily. So those are some other things what we saw. So our people have found this company as a kind of a strategy to acquire this company and probably go ahead on that. So I want to look at again that second section here. Discuss a little bit. I want to get a little bit more on that one. Right. So you remember that the first part was all about this proposal coming up, and we gave certain ideas about the proposal. So now they say, thanks for your help. The Max Anderson is saying, board is seriously considering acquiring Milco, and I need your help again to progress. So in spite of not having enough money, all that, the board had decided that they have to go through this kind of a situation. So here there is a mail. I think we discussed a little bit. I want to go more into this one and about at a family meeting. I understood that our board do not understand how to value a company, and they are worried about paying too much to acquire Milco. Using all of the information attached, draft an email that I could send to my family members so that we could take up at our next family meeting that express what the difference values represent and recommend reasons what would be useful to negotiate a price to acquire Milko. As you are aware, our company strives to achieve high standards of ethical and responsible behavior. Could you email your views with analysis of business and ethical? So here again, I want you to note down, could you email with your analysis of the business and ethical risk? So you have to look at both the sides, business risk and ethical risk. Two scenarios to look at, or two areas to look at. In respect of current management of its employee, what action should we take in respect of Milko's current outsourced employees we were to acquire Milko? This is what CEO wrote to you. Further to our meeting with your BOD last week, I'm writing to formally advise you that myself, my fellow directors of Milko are interested holding talks with ADF to pursue the purchase of Milko factory. As we discussed, my father who founded Milko retired due to poor health 5 years ago. My family and I have worked hard to build and grow Milko, and we are proud that we have a market for our entire production of cheese, which can be doubled with little quality improvement. We like to consider purchase price of not less than $5 million. So he is setting up a price of $5 million as the floor limit. Surely, our company, the maximum they will go is also 5 million because they are asking only 5 million. Our valuation is based on a forecast for the future cash flows for the next 5 years, which includes our estimates of a modest growth in revenue and profits each year. We look forward to hearing you from soon. So, our and Max Anderson has done some work on the company, and he has found it is an unlisted company that we know, and it's a family-run business. It has seen a decline in revenue and profitability over the last 3 years. So what I'm trying to link up is with the father's retirement, right? Even though he says they have worked very hard and all that, what we can see is this company, the profits are declining, revenues are declining. So maybe after the father left, particularly the father would have been having some kind of a way of doing things. Maybe the things have got changed, maybe the employees have gone off, whatever. The things may not be as same as when the father was there. So we have to be careful in the company what we are going to take over, because we can see it's the company that is not having a kind of a comfortable zone. Our source of profits declining, revenue declining, and this company also, the company we want to take over, is also in a no better position. Using cash flow data from Milko's latest financial statements, I have calculated an NPV equivalent of 3 million. Those people, they say 5 million. Our finance director says he has worked it out at 3 million. So obviously we know the price will be between 3 and 5. Using the published financial statement states that the NCA are valued at equivalent of 1 million. So again, we have to be remembering that the financial statement may be not very reliable because they are prepared, they are unlisted companies. So according to that, the assets are worth 1 million. Expansion to increase the production capacity will require 3 million more. So that's another commitment we have to think, not only buying the company for 3 or 5 million, but we have to find another 2 to 3 million, another $3 million to improve the company, to expand it. So 1600 is what we are going to have is 68,000 in the bank account, and for that kind of a thing, this is going to be a very, very difficult scenario. So Milko expansion does not have any HR function, and they employ most outsourced employees with no permanent employment contracts and use hire and fire method. There are numerous reports in Highland saying there are accidents at Milko due to lack of training. Usually they don't have people are leaving, people are coming. Does not invest any money on employee training or maintenance. selects its employees based on lowest daily wages demanded by the potential employer. So you can see they are not a very good company in employee relationship. Yeah, right? Employee relationship. So their profits are declining. Probably maybe the employee dissatisfaction also could be a reason.
Yes.
So our question is all about could you email your views with your analysis? First of all, he's asking I could send to my attached draft an email that I could send to my family members so that we could take up that explains what the difference values represent and recommend what would be useful to negotiate a price to acquire Milko. So remember, most of the students, what they did was they discussed the different basis of valuation. They have learned it in their studies. Asset basis, right? All that. But that is not what the question is. Question is, they are saying 5 million. We are saying 3 million. Net current assets are worth, non-current assets are worth 1 million. So we have to talk about those figures, not about the things what we have learned about listed company, this, that, and the other. Not that one we are looking in this case. So we have to make a recommendation. So we have to look at from that angle. The second part of the question is, could you email with the analyst the business and ethical risk? So first of all, let's talk about the different values, right? So, so that we could take up at our next family member meeting what the difference value represent and recommend with reason. So whenever they ask for a recommendation, you have to make a very, very firm recommendation and give your reasons for recommendation and also a kind of an action plan to implement the recommendation. So you have to start about this part of the question saying this is unlisted company, so there is no market price to go by, and that therefore the valuation of a company like Milko will be a kind of a negotiation. It's through the negotiating process, and it has no science. It is basically a kind of a negotiating, and it all depends on how keen Milko is willing to sell and how keen we ADF wants to buy the company. Remember, this company has a market in South America and they have a market for cheese and all that. But now we are a little bit worried because we see that company is also not doing very well. So something for us to worry about. So we, from our point of view, we should ensure that we don't pay anything more than the net present value of forecasted cash flow.
Yes.
The highest value of a company is the net present value of forecasted cash flow. We should not be paying anything more than the forecasted cash flow. But the problem will be to forecast the cash flow.
Yes, because you have given us a forecast, but we don't know how reliable.
So we have to be careful because our forecast can vary due to many reasons. One is exchange fluctuations. Exchange fluctuation, because it's a company that is in South America, so there can be lot of exchange fluctuation. There can be a political risk. There can be various government intervention coming up. Yesterday, day yesterday, we had our Sri Lanka government 2017 budget, and suddenly the finance minister says the foreigners are not permitted to buy any land in Sri Lanka. All this time he said they can come and invest. But suddenly he has changed his stance and given a new stance. So the people who have taken properties, all that, they are really in a political risk at this moment of time.
Yes.
So that can always happen. So it's very difficult to prepare a cash flow forecast and to do it. So the question is, should we go by the figures provided by Milko CEO, or should we base on our own analysis of past real figures of the company? Yeah.
This really do our own analysis. We need to do proper due diligence.
Yeah.
Before, yeah.
Yeah. Now, because these companies' financial statements are also not so reliable. Because it's a family-run company, shares are held by family members, not listed. So we don't have a market value. We don't have some kind of a guideline for negotiation. What we can realize is, since the founder's retirement, the company has started declining. The last year, the profitability has declined. So maybe the current management is either not competent or not focused enough in managing the company so well, and that may be a good reason. And maybe some new competitors have walked in. Maybe our products are not acceptable because he's talking about quality improvement, right? So that means probably the quality may not be so good. For whatever the reasons, we are not doing so well. When I say we, it is the Milko not doing well. So if you take so we have been asked to discuss the different values. So obviously the value given by Milko CEO is based on future cash flows, taking a modest growth, and you can safely feel, looking at the decline for past 3 years, it is very, very optimistic for them to think of a growth in the next year. Because they are declining. So for them to think that it is going to grow and to prepare their for their projections based on that modest growth may be somewhat exaggerated. And also we have to be mindful, if we go by their figure, we will need 5 million. Also, in addition to that, we need another 3 million to be raised for the expansion. Right. Then other one is, we can go by the latest financial statements of Milko, and based on their asset figures, we can work it out, and the non-current assets value is just 1 million. But of course, that is not relevant when you are valuing a going concern organization. So you can mention that one, the 1 million figure is not a relevant figure, because we are interested in making it a going concern, and therefore it may not be relevant for us. Right? So the recommendation with reasons, I would say the recommendation will depend on many factors. It will depend on the level of staff, right? On the level of staff to be retained, and their commitment, because most of the people are outsourced staff, but we probably will now have to go with more permanent staff, and their commitment to work. Because if their people are unwilling to work, then of course there is no price for the company. Then also we have to take into account the refurbishment or expansion expenditure. What 3 million we have to do it. We have to think of the political risk, the economic risk in the country like South America. We have to think like that, and also we have to think about the future of these Milko people, Milko directors, because if they leave the company, there may be a big vacuum created, because we don't have any experience in cheese manufacturing. So we trying to go with cheese manufacturing without their support can be very, very dangerous. So remember, we have a solution for this. What is the solution? We learned it in F3. That is to
You
go.
said,
Yeah. What is the solution?
Negotiate, we should try to do an earn-out.
Yeah. We can go for what we call a earn-out arrangement. Earn-out arrangement. What is earn-out arrangement? We pay them something today, but the balance we will pay, we will ask them to work and transfer the knowledge to us, perform, and then once it is done only, if it is done only, they will pay the balance part. If not, they will not pay. So that's what we call an earn-out arrangement. The directors of Milko should work with our company and earn the balance part of the thing. Right? So that's the thing that you should be looking as far as the way the factor that we should consider. So basically we should start with 3 million, our figure, and should be not moving too much because the company is not making huge profits at the moment. They are in a declining situation. We have to make a big investment. All that. Away from this one, I want to look at this seriously on this question. Look at how much they are paying for interest. 261,000 out of 420,000 profit they are paying as interest. 60% or 62% of the profit is paid as interest. Yeah. So you can see there.
Is it sustainable?
Yeah. Because the directors are earning, their director salary is only 250,000. They are the shareholders, they are the directors, but the bank is earning 261,000. So you can see there's a big disparity because they are paying. So I don't think we have any room for any more loans. Any more loans. The only way what I can think, if they want to go for this company to buy this, they have to go for equity investment. But in a family, they will not have any equity because there are people who are getting 250,000 salary, 50,000 per partner, per director, and I don't think they will have any kind of big money to invest. Isn't it? Because with this kind of profit, they don't have any money to invest. So what they can do is they can invite a private equity partner for a short period, for a fixed period to come and to invest. Maybe they have to think of going public at a particular point, but this is not the good time to go public. Why? Because their profits are declining. When the profits are declining, if you go public, you are not going to get best prices. So they might want to go with a private equity partner, develop the company maybe for 5 years, and then think of going public, and then maybe the way to go ahead. So that's something that you probably want to look at. That is something outside this question I was talking about. So now I want to go again to the question. Now, as far as this is concerned, so it should be closer to 3 million. Don't go much more than 3 million. Closer to 3 million, and work it out, and that should be the figure that we should offer. Okay, what about the ethical risk or the business risk? Shall we talk about the business risk first of all? From ADS point of view, what are the business risks?
The business risk is
Yeah.
in revenue for more it's a risk. High enough revenues.
Yeah. I think for me, the biggest risk that they have is right at the moment, they don't have any, I mean, they don't have too much of finances. By trying to go into this one, they might fall into more financial crisis.
Yes.
Right? They need to do something, but whether this is what they need to do, we have to think very carefully, because sometimes it can be very dangerous for you to go on a matter like this, because it all depends what we can get out of all these scenarios.
Mm.
So that is something which I would want to look at as one of the biggest risks, the finding money. Second one is about the employees, because they don't have any permanent employee, right? They are relying on outsourced employees. So for us to make such a huge investment and to find that the employees are not there, or that the employees are not so committed to the company, can be a disaster. So that also we need to think very carefully, because I don't think we want to go into a company which is having this kind of a scenario, because this can be very, very kind of a costly exercise for them, because the employees are not permanent. Because a company like cheese manufacturing will depend very much on the permanent employees and their commitment for the work, isn't it? So that can be another risk. Then the other big risk is always, because we are moving into a totally a new market with a with relative inexperience, no knowledge so much to talk about. So all that, when you take it into account, you might find sometimes, it's a big risky thing, because the foreign exchange risk, we may not have the experience and the expertise to manage the foreign exchange risk. All that could be a kind of a disaster for any one of us. So that's another risk I would like you to talk about. Any other risk that you have in this company, about this taking over the Milko company? You remember the small milk suppliers who are supplying the milk to Milko might get offended, might even agitate, might even protest when the new owners walk into the scene. So that is also another factor that we have to think all the time, because most of the people will not want to work in our environment, because they have been working in a different environment, and also that the country like America, South America, they can have a lot of foreign exchange risk and all sorts of political risk. All that can contribute it very heavily for that one. We are taking a big risk, because we are going to, remember, we thought we are not going to, our suggestion was not to completely take the supermarkets off, to go with partly supermarkets and partly with these people. So, but there's always a risk that the supermarkets will decide not to buy from us, but because we are not so reliable, they might decide on some others to buy the product, and that may, because this is the market that we have, that also can just get out.
Yes.
So that's another risk that what we have. Also, there is the kind of a management risk. Who is going to manage this once we take over? Remember, we have 5 directors. 2 are the father and the mother managing 1 farm. Other 3 are managing the 3 farms. So who can take over the managerial responsibility after investing, say, 3 million? Because they are also about 25% of our size company. So 12 million and a 3 million. So once you put that kind of a money, who will take care of this company? We can't give it to, we can't, after putting all our money, we can't just give it to them and say, okay, you all run the scenario. We have to find way of making supervision and all that kind of a thing. So to that extent, we might have some problems on this scenario, on this company, the risk there. Isn't it?
Yes.
What else can you think as a risk? What else can you think as a risk of taking over this company?
Well,
Other one was about the ADF brand. You remember they were thinking of immediately going for a brand change. That can be very risky because the ADF brand is not known, at least the Milko brand is known. So to go on that kind of a thing can be very risky. So those are the business risks we can talk about. What about the ethical risk? The examiner is always focused on ethical risk.
the ethical risk is the fact that Milko treats the staff well.
Yeah.
And we, being associated with it, will be risking our reputation.
Yeah.
Being viewed as a company that doesn't value employees' rights. Considering all the ADF
Yeah.
have a track record of treating our staff right, for us to go for a company that doesn't treat the staff well has been viewed negatively by the public.
That is because you used to see that the present Milko company employees, the outsourced employees, they are not properly trained. So when you are working with improperly trained staff, you will always have problems. There can be accidents, particularly we are selling food product like cheese, and which has to be maintained certain health standards and all that. So the quality matters a lot. So if you do a kind of a project without having proper staff, properly trained staff, your reputation can get affected very much.
What? Are you saying?
Yeah? So that's what we have to look at all the time. So right? So that's something we should be looking as far as the ethical risk is concerned. Also, we are not sure about their financial statements, preparations, and all that. So there can be, unstated liabilities and all that kind of a thing. That also can be a kind of a responsibility that comes on us, and that also can be an ethical risk. Although the examiner has not asked you for a recommendations about the risk management and all that, if there was you don't need to write on this one about the risk management because they are not asked for it. But what I'm saying is, if there was a question on this one on the risk management, I think on a acquisition, the best thing what we must do before we acquire a company, we must do what we call a good due diligence. Due diligence. Due diligence is the thing that will throw out many things, and that will tell us whether we should be really going ahead with this company or not. And that's something that we should be looking all the time. So I think always on a company that is working on things like acquisition, we should be looking all the time for due diligence. Yeah, due diligence is the process by which we can get a lot of things done.
Yeah.
So those are my answers for this particular part of the question. These are my way of answering this particular part of the question. Now I want to go from this one to the next part, the third section of the same thing. Months have passed Since you first heard of the proposal to expand to South America, Max Anderson had just called you into his office and closed the door. He advises, not she, he advises he has some exciting but confidential news to tell you. I'm so pleased to tell you at yesterday's family meeting, our board approved to acquire Milko Cheese Manufacturing Company. I'm sorry to drag you away from your normal work, but I'm sure you will realize what a huge task lies ahead of us with this acquisition, which is true because, it's a huge thing you are going to take over, and it is going to cause some kind of disturbance to your present setup of working, and it is very exciting, no doubt about it. So you have to be remembering all the time, yes, it is exciting, but we have to see what it is all about. So let's see what Max Anderson is telling. Some of my family members are not sure whether our farm workers need to be informed of this acquisition, as they believe it does not affect employees directly. Personally, I don't agree. I would like your advice on why we should communicate decision to our employees, and what information should the board present to our employees. So this is what he's asking to our employees. Should communicate to, and what information should present to our employees about why we have decided to undertake this major acquisition. I would like you to identify the risk involved in the process of integrating Milko's employees, ADS, ethos and culture. Lastly, I would like your advice on how the integration challenges could be overcome. I'm sorry to put you under pressure, but I need to report on these matters within next hour, as I have a meeting with the family later today. Right. So now they have finally decided. Earlier they were considering, and now they have decided they are going to go ahead. So maybe 3 months have taken, and they have done a due diligence. They have studied the financials, all that. And now the question is, should we inform our employees, our ADF employees, about this takeover? That is the question. Should we inform our employees about this takeover? Because what they say is they have nothing to do with this company. So because of that, we don't need to inform them.
I think
yeah.
We don't want, we need to inform them so that to put their minds in rest, because they will not be sure about what's going to happen to them, whether they'll be kept on what control this going to be. So to take away that uncertainty, we actually need to inform them so that they know what is happening, where they stand.
Yeah, because this is simply you are changing, you are making a big change in your strategy. All this time you were selling raw milk, but now what you are going to do is you are going to, with your milk, you are going to produce cheese, and also you are going to export it to some other country. So employees are our stakeholders. They are not the shareholders, but they are stakeholders. So they are interested in our strategy as stakeholders. So any changes in the strategy, we should keep them informed, so that they will feel in a way happy that the management has taken confidence. And of course, we must make a very a specific message, and also the message should be truthful. We can't tell any lies to them. It must be, because we have to be ethically responsible to tell the truth to these people, and tell them that why we are changing the strategy, all that. So the question is, I would like why we should communicate. So that why we should communicate is simply it's a change of strategy. They are key stakeholders. I mean, they may not have the power, but they are low power, high interest, but they are key stakeholders. So we need to keep them updated with the strategies that what we are going to do, because the company has been making sort of a decline in profit. So it's good for them to know that because it's the decline profit, because of the supermarket scenario, so that, you know, they will feel our company board of directors are very conscious about all these things, and that we are taking right decisions at right time to get the company on the right footing. I think it's a good thing to communicate. The next question is, how much information should we communicate? So communication, so first of all, they're asking and what information should be presented to our employee. So whatever the information that we can present it to a newsletter. But the shed managers must be called, and the board of directors must brief them the reason for this strategic change, all that. And they must take that and tell the employees at the lower level, so that everyone will know. So when they meet the shed manager, the entire board should be there and tell them, so that they feel that it is a total board commitment that what you have got, and so they will be happy about it. And you have to say why we want to go, because it is going to make a value-added product. You have to say the supermarkets are not paying enough. Your profits have declined very sharply in the last year, and therefore strategically you have thought about this change. And also you are looking for, maybe you have to talk about the new changes that might come up in the board with the new financing structure. Because they must know, otherwise they might think that you are selling the company. So you must say that you are not selling the company, but you are doing something to make them, you know, their future more comfortable. So that is what you should be looking to reply as far as the information required to communicate to Rio's employee. Right? Then the next part of that question is all about identify the risk involved in integrating Milko's employees into ADF Stone company ethos and culture. So we are going to invite into our family. Our family is a very closely knitted family, a disciplined family, a loyal family. We are inviting some people who are not so loyal to their company. I mean, there are people who will come and work today who may not come tomorrow. So when you bring that kind of a people into our culture, what kind of a thing can happen to our employees, and also to their employees? So we are in two different cultures, isn't it? Because our employees, we are looking at them very, very carefully, all that kind of a thing.
So there's a risk that
Yeah.
learn their European things if we don't train them properly to be integrated into culture.
Yeah.
Employees can be influenced negatively by locals.
Yeah, I think you will agree with me that that there are two different cultures here. So their employees may not understand the value of any training, and they may not see the need for it. Whereas our employees are properly trained, and they see the need for it. Right? So because of that, we have to get them into our culture, by giving them a proper induction.
Yes.
And we have to slowly screen out and see the best employees or the most valuable employees, and probably we have to get them absorbed into our permanent card.
Yes.
So that is a way for us to do it. And a good strategy in a situation like this is to do a good CSR project in their area. CSR means you get your employees involved, you get some benefit to them also. So get a good CSR project going through. That's a good way for you to always work through this kind of a scenario. So what you must do is you must look at a good CSR project. So that way you can, get some kind of culture differences away. They will have a lot of suspicion about the y'all, about the ADF management. Why are they coming all that? So good thing if we can keep our Milco management also with us on a medium term basis. And we have to give a good induction, give a good training program. That's the way I think we should go along to give them that to get away from the risk what we are facing, and also get them aware of our code of conduct. So they will know we are a company that is valuing ethical principles, and to go ahead and to go along with the ethical principles. So that's the way. So this is the third part of this mock what we did. So basically you can see the 3 sections flowed. I'm sure last time when you said for the exam answer, it could have been the same story. From section 1 to the section 2 to the section 3, it's the same story in different stages.
Yeah.
But the danger is lot of students, they forget what they wrote in the section 1 and they go and write something totally contradiction to section 1 in section 2 or 3. That is very dangerous. That's very dangerous. We must always do consistent. Now in this particular case, if we were decided that we have advice on the takeover, we must continuously talk about the takeover. We can't say at one section a takeover and another section no takeover. That's not proper. So I'm writing an answer for this one. I'll put up a full answer and I'll send it to you for you to go through this answer.
Okay.
But how is your program? I'm free on free on Monday morning, free on Wednesday morning. How is your calendar? Pardon? Monday or Wednesday?
Can I do both?
I can't hear you.
I said, can I do both? Hello? Hello?
Can you write because I can't hear?
Can I do both? Hello?
Hello?
I want to do both too.
Can you write on the Skype board?
Okay.
yes, 6 a.m.
Yes.
Right. I will see on Monday, and I will keep Wednesday as a reserved for you at 6 a.m.
Okay.
Okay, I will send you the answers, and I will send you a new mock also, and we will look at something more.
Okay.
Okay, then have a great day, Marian. Take care. Bye. Bye.